What happens to accounts that are closed but still have a balance on them and still show up on your credit report? Hey guys, it's Mortgage Mel, and it's time for today's Mortgage Minute. Over the weekend, I was working on a pre-approval for a person who, when I checked their credit report, the scores were okay, definitely passable for the type of loan that he was looking for, but there were several accounts at the bottom. Let's just take a moment to go through what a credit report will look like. So you'll start with your open accounts, whatever they may be. Might be credit cards, they might be your car loan, could show your mortgage, and then it'll move on to closed accounts, those that you've closed and those that have been closed for you. And then we'll see the derogatory accounts. So those are accounts that maybe you missed a payment or something else went awry with them, and so they count against you or are dinging your score a little bit. And at the bottom of that section, we'll see any accounts that still have money left on them. So for example, if you bought furniture and you didn't pay the last $1,700 and eventually the company just gave up, but they're still reporting that as money that you have left on the account, you still owe that money. So then before we can do a mortgage loan, that would need to be paid off. Or if you have a credit card and the credit card has $15,000 left on it, but the company gave up, they didn't send it to collections, they just closed the account, you still owe that money, and that money will still show on your credit report and it will follow you. So when a person like myself is trying to qualify you for a mortgage loan, we can't, because you still owe that money. So those things have to be paid off first. So what would we need to do? A, document that they either aren't yours, like let's say you were divorced and that was supposed to go to the ex-spouse and it's still showing up on your report, then we would need to document that. Or B, you tried to create a payment plan and you are now in the midst of paying that off, then we would need to document that. Or C, you still owe that money and it needs to be paid before we can do a mortgage loan. So then we would have to document that you've paid those accounts completely off. So the plan for a pre-approval would be making sure that we document what happened with those accounts, and then we could move forward to give you a pre-approval and then give you a mortgage loan. I hope that makes sense. I think a lot of people assume that if they haven't paid on something in a long time and they forgot about it, somehow that company forgot about you. And that is not the case. They do not forget that you owe them that money, and they continue to report on it on a regular basis. And that'll continue to drag your credit scores down and also show as money that you owe. So just important to note, they don't just disappear by magic. I hope that helps. If you have any questions, leave them in the comments. Give me a like and a follow, and have a great day.